below its issue price. Bala, the CMT at Cash the Chaos, now joins in to discuss the market setup. Jay, hi, welcome to the show. There's renewed pressure which has come into the markets, but what would the texture be according to you, considering that there's been a little bit of an intraday recovery, but that too seems to be sold into now?
Hi, Ekta. Thank you for having me on the show. I've been saying for the past 3-4 weeks now that the markets were in a distribution phase, and I pointed to critical levels on Reliance, and that's been taken out. That level was 28.40. That's been broken, and so I think the distribution is complete. The market at the moment is at the risk of a price expansion to the lower side. So the last vestige for the bulls is 21,530. If that were to get broken, I think this will transform into a medium-term correction, which I've been anticipating for some time now. So watch out for 21,530 as a very critical support for the medium term.
All right, Chair, 21,530. All right, we'll keep an eye out on that. What about the Nifty Bank? Today, it's at least doing a relative outperformance. How do you see this one panning out? What are the levels we should track?
Yeah, that's right. See, the Nifty Bank is, waiting for the Nifty to catch up. It's been an under some time, and it's been marking time for Nifty to catch up with it. So, but it's holding above support, like you correctly pointed out. 45,600 is a very important support for Nifty Bank, and 600 that's the support for the Nifty Private Bank. So watch out for these two levels. At the moment, these two are holding. I think once State Bank starts to crack, I think both these indices will start to crack.
Jay, you look at sort of Elliott waves, right?
That's right.
So there is sort of on some have highlighted this ending diagonal on the Nifty. Is that something you're kind of watching as well? It's already happened, and it's a rare occurrence. The last, I think, you've got to go all the way back to 2007-8. Just talk to us about that if you are following it.
Yeah, that's right. I know I generally tend to not get technical and use layman terms so that all your viewers can follow. And yeah, that ending diagonal actually was the reason why I was calling this a distribution. And if you go back to the pre-COVID highs, that was also an ending diagonal. If you go back to the October and the Jan 2008 high, that was also an ending diagonal. So it's a very significant occurrence in important tops. So this is probably going to be another one, and it's gone below that. And to eliminate the possibility that it can other components of the ending diagonals are not unfinished. So that's the reason why I'm watching 21,530. That will mark the level where the second wave within the ending diagonal is broken. So it will prove that no longer there is high probabilities.
Okay, all right. Just hold on to that talk, Jay. LT Foods, I think we should just pull up that stock. There's a rather large trade that's taken place on that one. So just keep an eye out on that counter as well. Maybe by the end of today, we'll have to keep an eye out. More than 1% of equity changing hands on LT Foods as well. So maybe just pull up the intraday chart of the stock, or maybe the block deal as well. Explains why that one's down close to around 5% as we speak. Jay, but you've told us about the indices. What about individual stocks? You normally give us a couple of ideas. So what's on your radar?
Yeah, last week I pointed out how Tocom rubber prices, shooting up sharply, and I believe Nomura has come out of the report. There's something else for others to follow. There is a sharp rise in cocoa prices. So that's going to have an impact on FMCG names. From the beginning of the year, if you see the underperformance of Nestle and Britannia, this is the reason cocoa prices have shot up more than 100%. And this is just the middle portion of the move. Probably after further consolidation, you'll see further higher highs to come through for cocoa. So I'm bearish on Nestle. Nestle with a stop loss of about 26.53 for a drop to about 20.40. And I'm also bearish on Polycab. From the January lows, it has come up in a corrective fashion. And the recent high of about 49.95 is a stop. And this has potential to drop sharply to 3,500. And I'm bullish on MRPL. MRPL has got an unfinished up move. The high it saw last year, it's an incomplete move in my opinion. So probably it will hold 180. That will be the stop loss for it, and probably go to record highs past 290.
Okay, all right. Well, Jay, just hold that thought. Let's get in some opinion then to discuss the current market outlook, demand trends, and recovery in the rural economy. We did speak to market expert Mahesh Patil, CIO at Aditya Birla Sun Life AMC. Let's listen in to what he had to say.
While overall outlook still remains fairly robust, there has been some amount of slowdown. I mean, not slowdown, I would say, but the recovery, what we are looking at in the consumption is slightly tad weaker. So I think in this backdrop, some moderation is something which I would say is a welcome thing. I don't see, especially the Nifty, I don't see any very large correction. I think we'll have to see how the rural economy picks up, right, post-elections and the monsoon. I think that will be critical in the next fiscal year for overall drift out across the sector. In the commercial vehicle space, we are seeing some amount of kind of a moderation now after 2 years of very strong growth. So that's a sector which could probably kind of underwhelm on the downside is what we think. The IT sector is another sector which has, I mean, there are a lot of expectations of a rebound into the next fiscal year, but I think it might take another quarter, okay, when we see a meaningful recovery over there. So there again, the commentary, okay, from the frontline companies is while order inflows are there, but I think the execution, I think the pace, I think that will take some time.
Okay, so that's some opinion coming in from Mahesh Patil. Jay Bala is still with us. Jay, wanted your thoughts on a couple of these PSU banks. They continue to sell off. It's been a rough month for a couple of them. Case in point would be something like a UCO, which has lost around 12% of its market cap, IDBI, which has lost around 7%. Any value at these levels?
See, UCO Bank probably has an unfinished move past 72, but I doubt if the mainline indices crack, this can continue higher in this leg of the move. So I'll be a little bit cautious, but watch out for it holding. I warned about Bank of Baroda being toppish last time when it was close to its record highs. So that's also weakening. So I think once SBI starts to go below the round number of 700, I think most of the PSU banks will follow suit. So I'll be, even if there is a bullish unfinished move in names like UCO, I'll be a bit cautious on PSU banks.
Okay, all right. Jay, I remember last time you had given us a view, I think, on NASDAQ as well as Nvidia. The global action is going to take center stage for the next 48 hours. So what's the view out there?
Yeah, that's right. I think Nvidia has probably topped, but we need confirmation. If Nvidia were to print 823, that's going to signal that no more higher highs are coming through. But as long as 823 holds, there's a possibility that there is one final high to come through for Nvidia. It's already gone parabolic. So a lot of caution out there. It had a key reversal day last Friday. So and it's become a very important macro. So it's a very important stock to track. And the most important event that's happened today is the breakout in USD JPY cross. That's actually propelling the dollar index past the downtrend line from the 2022 highs. So watch if the dollar index were to close above 104, it'll cross a weekly trend line. So it's an important event that's happening here today.
No, we were highlighting that earlier. And actually, the dollar is strong, not just against, actually the dollar index itself, so it contributes against a wide variety of currencies. And they take that point on Nvidia, right? Nvidia is like the Tesla of 2021. So it's not just about Tesla, but what it represents. And here, of course, what it represents is this big move led by, those large 6 or 7 stocks. It's been called, the Magnificent Seven, the tops, the large AI stocks or whatever. But it is, of course, representative of the big rally we've seen, such a concentrated move. So if Jay, just one last point, what's the advice here? In terms of if you're already, of course, leverage and etc. is already out of the system. I'm assuming you would be out of the system after the sharp correction that we've seen. But are you saying reduce risks further, gravitate towards large caps? What's the advice?
I've been saying for the last 3-4 weeks when we called it a distribution, I asked people to raise cash. That's the best strategy here. Even gold is risky at this point of time. If gold were to drop below 2100, it will shock a lot of gold bugs. So, raising cash makes a lot of sense. You should be at about 50% cash, and that will be the ideal level. You can leave the rest in the market. But if you can go to 100% cash, nothing like it. And I pointed out on the 1st of March, about inverse head and shoulder breakout in crude. Both varieties are now breaking out, and that's an added pressure for the market. So, there's at least a $12 move left in both varieties of crude. So watch out for it. Cash is a very important asset to move to.
All right. Okay. $12, huh? That will take us to the 3-digit mark, at least on Brent. Ajay, great to speak with you as always. Appreciate your time, and thanks very much for joining us here on this edition of Closing Bell. Well, the market is ending.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.